Hello. Mic test. Hello, guys, and welcome to the 91st edition of the Trading Opportunities webinar. This is Neer. Before we continue, let me just. Hello, guys, and welcome to the 91st edition of the Trading Opportunities webinar. Yes, the microphones are working fine at my end. So, with that, let's now head over very quickly to the disclaimer before we do anything at all in this webinar. So, here's a quick disclaimer. Suggesting that all content presented here is for educational purposes. I'm not soliciting buy or sell. If you do want to use the views presented here for your trading, investing, you yourselves will be liable for your profit, loss of profit. With that being said, you can read the rest of it by yourselves. It's on screen. So, guys, before we proceed, if you guys are available or currently in the live chat, it would be appreciated if you can tell me if you are also able to hear the voice as well as see the screen share. But I'm not going to wait for a response. I'll just check one more time at my end before we actually begin with the content. So here goes my test back again. Yes, it's working fine at my end, so we'll just continue from here. So before moving forward with the webinar, I would like to give you guys a very quick introduction about who I am and what I do. So guys, my name is Neerav. I'm the admin and owner of the website 50 Eyes Market Analysis, where I have been sharing my work for many years. Quite specifically, coming to this webinar series, which we are conducting, is called the Trading Opportunities webinar. So far, we have conducted 90 of them successfully. And this will be the 91st edition, currently being broadcasted both on LinkedIn as well as YouTube, obviously, which is where this page is. So we conduct these webinars every Friday at 2 p.m. GMT and 7:30 p.m. or 7:30 p.m. IST. So you can just convert it to whichever time zone you are in. So far in the past 90 webinars, we have captured 169 trades, which were all discussed live in front of you guys on YouTube. And I'll just like to mention that I was just checking the 90th webinar, which was the webinar we conducted this webinar, sorry. So in the last 89 webinars, we have captured 169 trades. So, and I was checking the 90th webinar. All the 6 setups we discussed played out. Euro, crude oil, gold, S&P Nifty, all of them worked out literally. And BTC is following the analysis we discussed. So making the total tally of the trades which have worked out coming to 175. So we'll look at all those discussions from the past webinar and what was said and what happens. But just wanted to let you know, guys, upfront, right? And that's about it for this webinar series. Apart from this, I'm also the author of the book Think with the Markets. It's available on Kindle, Amazon's Kindle platform. And before we move forward, there's also one more thing I like to show off. I've been keeping a track record of all these webinars and videos that I've published on YouTube so over the years. And as you can see, my accuracy stands at 80% plus for all over these years. And what you are seeing is these spreadsheets. For instance, in this 2018 spreadsheet, you can see all the name of the instruments discussed, when the discussion was done, date, what was said about the discussion, the link for the video, and what happened on the discussion. And in the end, we just give a score on the number of things that worked, or as +1, things that didn't work as -1. So on and so forth. Over the years, we have a lot of analysis which was published live as webinars and videos. For instance, you can see in 2019, 84.88% accuracy. We had 73 different analysis which worked out of the 86 total discussions. So this is the way we have been publishing this, and for 6 consecutive years, the accuracy has stood above 80%. This is a industry leading record, and this is a forward tested track record done publicly in front of you guys. So completely very viable. So that's just something I like to throw around before moving forward. And lastly, if you want to become a member of our private group, currently it's open. I'm thinking of closing it very soon and putting some restrictions on it, as I'm seeing that some people who join in are not really what do you call, enthusiasts of Elliott Wave, and they are just in it for wrong reasons. So, but for the time being, it is open. I'll let you know, guys, if any changes are being made in the near future. So, for the time being, you can what do you call, request the details here. It's 50hours.com/contact us, and just select the subject matter as requesting details for Slack. Right. Lastly, in these webinars, we proceed always with Euro USD, followed by crude oil, followed by gold, S&P, Nifty, and in the end, we discuss Bitcoin. So this will be the sequence of discussion in this webinar as well. So with that being said, let's now head over to our actual discussions and start with the chart of Euro USD. Before moving forward with the chart of Euro USD, I'll just quickly like to check what happened in the last discussion. So let's quickly see what the last discussion was about on Euro USD. I'll just open in the YouTube video and check out our last discussion. It will take a few moments to load. By the way, in case you are watching these videos, make sure to turn the video quality to 1080p. So this is our discussion on Euro last time, and as I recall, we were looking for long trades on Euro. This was the analysis, as you can see from the last recording. We were thinking that this market will go up as an A up, B down, and C up as a kind of a flat correction. And we discuss see this discussion further. I'm just pointing out where is the A, where is the B, etc., etc. But you can check the whole thing for yourself later on. Long story short, the market did go up, and this is one of the 6 analysis which played out. I mean, basically every analysis played out. So this is one of the analysis which played out. So now we'll just look at the actual chart, and this is the discussion from the last webinar. Where is Euro? There it is. The last webinar discussion started on 24th. So there it is, 24th. There it is. So this was the part which we were discussing, A up and B down, and then we were expecting upward movement here. And the market did go up, and +1 for this analysis. Updated counts, we'll obviously discuss them now. So now let's see what's the updated count and the analysis on this market. A lot of things have changed from our past discussion. I think I gave a hint of this whole count being a possible flat structure in the past discussion as well. But if not, then I'll just discuss it now in detail. So let me just, yes. So this is our point of reference, 1.09645. I think I forgot to hide the text thing. Yes, so 1.09645 is our point of reference. This level is where we'll start the analysis from. And the market has gone down here and then up again, taking out the high, taking out this high basically. And then it's heading back lower again. So this is generally represented as a flat kind of correction. And we call it basically as a 3 down, 3 up, and then 5 down. So I was expecting it to become a running flat, but it looks like this market is going to test the low of the wave A. I'll just mention the labelings here. So by the way, in case you guys are not aware, I'm using Elliott Wave analysis, which I have been researching on for about 8 years. And this is a pattern in Elliott Wave analysis called a flat pattern. So as you can see on the top right hand corner, this is the leg down for the A. The leg up is for the B, and the next leg down is for the C. So the expectancy was this market will reverse with the C complete somewhere here, but it has gone a little bit lower. So now the expectancy is that it can test the low of wave A. Now, if it does that, that's well and good. It is still inside the, what do you call, possibilities of Elliott wave discussions or the possibilities of the wave counts. But it does raise a question that maybe this whole count is not the right count or not the count which is playing out. So let me elaborate on that a little bit. So first of all, we expect that once this flat correction is complete, wherever this wave C completes, that this market will retrace the whole down move and then go up to make new highs. That is the main idea of the structure. However, this leg down for wave C has been extremely strong, which is raising the idea that maybe the whole leg up has somehow completed here itself and is not really going to reverse after the completion of the C. Basically, this whole pattern is not a flat correction, or it is basically something else. Now, what can it be, or what other pattern could it be? We can quite simply count this as the 3 complete here, 4 complete here, and this is a 5th wave complete here. Now, it does not look like the most beautiful count out there, but it can be counted like that. So basically, long story short, I'm not 100% on this count, and instead of going straight out longs, I'll much rather wait for a clear confirmation on it. As far as this down leg is concerned, we were able to capture the reversal as well as the parts of this move down. Specifically, the last part, it was also posted in the Slack group. So we'll have a quick look at that as well before we discuss anything else on this count. So as I was saying, we were able to predict this leg down, and the target minimum was also 1.08642 was also predicted. Next up is the target, which is the last low, or the wave A low will be 1.08517. This is our next target. And now coming to the actual discussion of the structure within this wave. Now the structure within this wave, as I said, should be as that of an impulse, and it is so far fitting in nicely. We have completed 3 waves and we are currently in the 5th. So in case you are not aware, an impulse is a 5 wave structure in the downward direction, which will have 5 waves in it. And currently, if we are within the 5th wave, which looks to be the case, then that should be the last leg. So what that really means is that once this 5th leg is complete, either it can reverse from the current mark target, which is this violet line, or from the next leg, which can take it to 1.08517. So whichever level it reverses from, we expect a minimum of 3 waves in the upward direction, right? These 3 waves can take this market to wave 4 level a little bit higher. And in case the whole structure was flat, which we discussed at the beginning of this analysis of euro, then it can take out the last high as well. So exactly that remains to be seen. And for that reason, I'm not going to make any great trades or big trades on it right now. We'll wait for confirmations. And yes, minor long trades we can take once we see the end of this wave 5, but nothing really big is going to be traded here for now. So that's about it for the discussion on euro. We wait for the completion of the 5th wave. No big trades for now, but minor longs possible once the wave 5 is complete and it has confirmed the downward movement. And lastly, I'll just like to quickly show off one of the posts, last few posts. So there was the euro post. We were expecting downward movement here around 1.09292. I suggested that more downside is remaining. And after that, the market has gone to 1.09021 and still more downside is remaining. And after that, you can just see what happened in the live market itself. It went to 1.08644. So that was just a small glimpse of the last moment. We were actually able to, as I said, track all of this reversal and then this lag down and everything in these posts. So you already know, if you are interested, you can check out the details or get the details via the contact us page. But with that being said, let's now head over to the next chart of crude oil. Now, crude oil also played out the analysis which was discussed last time. Let me just quickly show you our crude oil discussion last time, and then we will pick up the current chart. So somewhere here we discussed crude oil, and by the way, these all webinars are time stamped, so you can just scroll your mouse over the timeline and it will show which analysis is being discussed at any point in time. So yes, as I was saying, crude oil we discussed last time around here, and the discussion was that this market looks to be forming another ABC pattern, just like we discussed on the euro discussion last time. And once this wave B is complete, we expect an upward movement on crude oil, and it should take out the last high, which is around 78.7 or 78.8, roughly speaking. So this is the recording. You can obviously check it by going to 50 Eyes Market Analysis YouTube channel and hitting the live option there. All these webinars are here. This is the webinar we are checking out. So yes, as you can see, this was the analysis, and I'll just quickly note the time we already know it was 24th of November. So now let's check what happened after 24th of November. So this is the 24th of November. Somewhere here that discussion was done. And after that, the market has remained higher than this low of 74.06, which was our stop loss level. Again, that's something you can just go ahead and check in the recordings, but we do not want to waste too much time here. So this was one of the stop loss levels, 74.08. The idea was that the market, if it sustains above it, should go up and take out the last high, which is 78.74, which is exactly what the market did. Right. So hence hereby completing the analysis as expected. Actually, not the structure, but yeah, the analysis direction played out, but the structure is a little bit different. So now we'll discuss the changes in structure and what I think of this market right now. Firstly, the bullish count still cannot be relegated. What we have over here is a very strong, what you call sell pressure here, as can be seen in the last leg. So we'll just quickly discuss the bullish count and why I'm not completely in or completely sold out to buy longs on this counter. So if you look at this POR or point of reference, which is coming around at 72.69, this is the point from which we'll discuss this count or start this discussion. And the analysis is more or less the same as the discussion on euro. We are thinking of this market as a flat correction, and it's in the inverse direction. In that case, we were discussing a flat in the opposite direction. No, actually the same direction. Sorry about that. So this is the wave A up. Right? We are expecting a wave B down. In this case, it could be a zigzag. But whatever the case, maybe we expect a lag in the other direction afterwards. Right. Now the thing is that when you see a strong down leg like this, it kind of raises questions that maybe the whole drama or the whole leg to the upside is already complete. Again, the same argument as the euro count. Maybe the whole drama is already complete here, and this is the start of a new leg down, right? So the same situation sustains here, the same analysis, and A up is complete, B down is complete, C up is complete. So this leg can just also play down. So now at this point, the problem arises: what do we actually do? So in this case, I like to just clarify that we do not have a confirmation for any of these counts. Neither do we have a confirmation for what do you call the upside movement. Neither do we have confirmation for the downside movement. So in a situation like this, it's just wait and watch. What I've done really here is placed an alert near the downside level of 72.815 and an alert at the upside level of 79.535. So one thing to point out here is we were expecting an upward movement. The market sustained and formed some patterns suggesting the upside movement. But if it fails, then this downside movement should be stronger than expected or a little bit more intense than generally expected downward movements. That's the first thing to note. Setups will play out conservative. These are all conservative setups I'm discussing. I will only be interested in looking for sell shorts below 72.815. So a lot of movement would have already passed, right? Same goes for the upside setup in case this market has wave B incoming here and the C still remaining. Then again, as I said, I'm not interested in going longs at all right now and will wait for the market to take out 79.609. Again, just a conservative setup and for reasons I've just clarified. So not much to discuss on this counter as well. It is also a sort of stay cautious and small position only kind of counter right now, right? and we have better setups, or what do you call, better things to trade this week, but those are not in euro and crude. So let's have a head over to those things with our next chart, gold. So again, as we do with all the analysis, let's just quickly check what happened with our gold's analysis from the last webinar. So here is the recording for our last webinar on gold. And in the last webinar, let's see what we were talking about it somewhere around here. This is the long-term analysis, which we will also have a look at. But what I'm really interested in right now is the short-term analysis on gold. So we'll let this analysis play out a little bit. Yes, there it is. So this was the discussion from the last webinar we did on gold, and the idea was that this market is headed up as a wave one up, correction for two, and then upside. We also had the targets projected at 2028 and 2039, and as we will see, both these targets have been achieved. Plus the intermediate movements, a lot of the activity we were able to capture. So let's now head over to the current count. Again, this is bringing our tally of trades that worked out to +3, as we saw already. Euro +1, and crude oil also went up as per analysis, and gold also achieved the upside targets. So here is the analysis date around 24th November. We were discussing this chart. The market was here somewhere, and then the upside level of 2039, and whatever the other target was has been achieved already. So this was the target level mentioned in the webinar. So with that being said, we have the last analysis playing out, and now let's check out what's the current outlook on this counter. So I will not go into the detail of the whole thing, but what the idea right now is that we are expecting a corrective structure for wave 4 from here, kind of the same as euro. I mean, we all have a corrective structure in all those patterns. And what I think might be happening here is, I'll just point out where the 38.2 retracement level. Right. So generally we expect the wave force to reverse from 38.2. So when this market hit this level, we were pointing out that this market can now take off from here. But a little bit out of the ordinary, it has gone back near the lows. So what might be happening here is that we may have an A wave here, B wave here, and a leg down for the C here possible, which will then take out the highs for new longs. Or it could be just continuing as some sort of complex correction. Whatever the case may be, the idea is that the wave force 38.2 level has already been achieved with this line, right? With that being said, we do not want this market to sustain too much lower below the 38.2 level. So for that reason, if we are seeing that this market goes to 2031 or lower levels, let's say 2030 or lower level, then this makes the idea of more bullish activity a weaker idea, and let's say a less likely count. So long story short, we want to see the market sustain above 2030, and we want to see the market take out the highs, which is around 2050, let's say 2050, 2048. And that will be our setup for new longs. Now, in this case, we already have a lot of pluses piled up here. A lot of this up move we have already captured in the form of multiple different trades. So in this case, we are not much concerned about the risk. We can just simply risk 5-10% of what we have made as profits in the last week itself, and play out this setup for the wave 5. As far as the upside targets are concerned, we have the initial resistance coming at 2053.6, followed by 2059. So this is the upside target level we will expect in case this level plays out, or this analysis plays out, and sustenance above 2030 is important. Below it, we consider this count as low probability and possibly incorrect. Right, so that's about it for gold. And before we move forward, I'll just like to quickly show off our detailed number of trades which we pulled on this counter. I think this is the. Let's head over to the gold part on Slack. So over this week, we pulled out a lot of trades on this. I don't think it will be a good idea to show every single one, so I'll just go over the last 3-4 ones. And this was the analysis posted on what is this 27th November. We were at 2012 and we were expecting more upside. And then after that, on 28th November, this market went from 2012. It's more or less the same, just an analysis update or intermediate update. And then there's the initiation of longs. Market is going to 2026. The immediate targets coming at 2040 and then 2055, if I recall correctly. Let's see. Next target 2039 as posted here. Then sustenance above 2052 is required for upper levels. So this is still playing out. Let's see what next. Precisely, it's the resistance marked at 20. Sustenance above 2034 is required for 2058. Now there it goes again. And this time it is now stuck in the wave 4, which we just discussed. And so far it has just remained stuck in this wave 4. And all these analysis, we are just analyzing the wave 4. As I told you guys, we were able to monitor this leg down to 38.2 in live market, and our idea was that maybe this is the end and it will now go up, which is not something that happened. And it is still there, and our assumption is possibly a flat. And I've discussed the whole setup, the sustenance above 2030 and the alert line on the top, everything which is 2050, etc. So these are all the posts which were all posted live, obviously, in the Slack group, alongside my own trade ideas and entries, etc., etc., etc. So again, details, etc. You already know how to get them. If not, it's scrolling down on the video on how to get details for access to Slack group. So that was about it for our discussion on gold. Let's now head over to our next chart of S&P's 500, which will be followed by Nifty 50 and then Bitcoin. And yes, one thing I just wanted to point out before we move ahead with these charts. This is the image which is used on gold, not gold, as the thumbnail image for this video. And what I'm really showing off here is that this is a huge long-term resistance. Keep in mind, this is a weekly chart. On the top, you can see here, which I've circled right now. So this is a weekly resistance level, which has been incoming. And by the way, we have pointed it out in the last 2-3 webinars as well. So the first time we saw the market moving inside the resistance level was in 2020 August, then in March 2022, and then again in May of 2023. So this time the expectancy is that this upside level, which is around, roughly speaking, around what is this 2074, 2070, let's just say 2070, something around, roughly speaking, around 2070. This has been hit 1, 2, and 3 times. And this time, the time analysis or the rough time analysis which I've conducted is suggesting that it can be hit somewhere around April 2024 or before it. Keep in mind, time analysis are not precise and they may or may not work, but the rough guidance from the analysis is always seek. So April or before it, we expect 2024 to be hit. So that means two things. If we just consider this idea, it is possible then that this is the flat complete here and this market sustains as a sideways movement here before heading for 2070, right? If you are not understanding what I'm saying, I'm just talking about a flat correction. In a flat correction, the market moves inside a boxed range. In this case, the box range which will be between 1809 and to the upside, it will be around 2084. So the market will just go there and around April, it will just break through, right? Because what we are really trying to see is that if the market is going to go and make new highs, and if it is, when it will do that. Second idea obviously is quite clear. The second idea is that the first wave is complete here, second wave is complete here, and this is the start of the third wave. So that is quite clear, and that is something we already have considered. So just keep in mind that whenever we see a break of these level, market sustaining above 2070, or basically let's just say around 2090. I'm just stating things roughly because these are all spikes here. If you observe, the market has not stayed here in on the weekly chart. These are all just levels which were touched and the market sold off, levels which were touched and the market sold off. So there is no clear level to point out here. Just around 2070, 2090, just say is the resistance level. So if the market sustains around these levels or above these levels, if we see a weekly close somewhere there, then we can expect new upside movement to come in these markets, strong bull bars, etc., etc. You get the point. Not going to spend too much time on it. I've given the rough idea. So with that being discussed, let's now head over to S&P's 500. So S&P 500, again, one of the analysis which played out. Let's head over and quickly check what was discussed in the last webinar. It was discussed around here. So this is the analysis for S&P's 500, which we were discussing in the last webinar. The idea basically is that the market is sustaining in a sideways range, and we were seeing a down up, a B up, and then we are expecting a C down. And in truth, we were able to capture these intermediate legs very clearly in the Slack day-to-day post or intraday post as well. Probably have a look at it later on. But the main idea was that when this market breaks or sustains above 4571, if you can see the mouse is over that level 4571, then we will be interested in long trades on this counter. So as so happened, the market did go and make a break above 4571. It did go to 4588, so it actually played out the analysis, but not to my liking. I was expecting a little bit higher levels. I was expecting the market to go down 4600, maybe higher, but it did not do any of that. So as far as the analysis is concerned, it was played out, but not precisely as we were thinking. So what really is happening right now is I think this market is going just sideways right now. It could be doing multiple different things. Could be going sideways as a W and then an X and then a Y like this, or it could just be going sideways as a flat kind of correction like this, basically moving inside this box range. We don't really know which one is this performing right now. So right now it's a wait and watch. As you can see, I have already placed an alert around 4586 and will be interested in longs only above it. As far as downside is considered, we have some levels placed around 4531. We expect this correction can go, and below 4531 it can go and touch 4495. There is one little bit concerning bearish count which I have to share here, which is of low probability, but I'll just share it anyways. This count suggests that from this point of reference, which is around the price level of 4105 over here, I'll just remove everything 1 second. So from this point of reference, there is a possibility that this whole thing has completed an impulse in the upward direction. Now, the only reason I'm not considering this as a high probability count is because this 5 is way too small compared to this whole thing, right? So that's why I'm considering this as a very low probability count. But if it really is the count, then that can mean extreme downside movement because of two reasons. One, the wave 5 is exceptionally small, and second, this impulse is complete. So generally completion of impulse will bring the market down at least by 3 waves down, and in this case the wave 4 is so small it will just be taken out in a within the session. So that's just a concerning thing I just wanted to point out. So for shorts, I do not have a setup plan right now. I'll just look at it in the live market in the intraday posts I make, or the day-to-day analysis I do, I should say. So far as upside is concerned, we just discussed this is the alert we have placed to the upside. We'll look for longs above that. As far as the downside is concerned, we do not have a setup, but I think I have given you some downside targets. Around 4495 is our lowest target. If the market goes below 4495, then just keep in mind that it may be the impulsive count which has played out, and this market can then go much lower to 4400 maybe, or maybe lower. But as I said, we don't have any confirmation for it. And yes, while this whole thing was playing out, while this wave 4 was playing out in live market, we were able to capture a lot of these movements. Let me see if I can show some of them. Around 28th November, we'll be able to see some of these posts. So here is our channel on Slack for S&P's 500, and let's quickly check around 28th November. Where is 28th November? Yep, so there it is. We were expecting a lot of. Let me just show you what this says. So this post is suggesting downward movement, sharp fall from 4558. As you can see in the commentary, sharp fall expected. And then there is the post on, or the next post, let's say. Sharp leg down precisely as per analysis, market move to 4550. And then let's see upcoming analysis. Let's see if there is something concrete. Here is analysis or an update. We are expecting the market to break first gold down for taking out the low of this wave 3 yellow, and then go up for the wave D, which was the prevailing count at that point in time. And as you can see in this post, the market did go and break this low. This was the wave 3 yellow, by the way, in the last chart. And then it went up for the target box of wave D as well. So I think within these 2-3 posts, we captured 4 or 5 trades here. So on and so forth. You get the idea. We were able to capture a lot of this movement. I don't want to go over every single one of them. I just wanted to give you a gist of what I do in Slack, and that's all. With that being said, our discussion on S&P is now complete. Let's quickly head over and check Nifty 50. Interestingly, again, this is something that precisely worked out. And before we head over to the chart, I'll just like to request you guys to hit the like button if you are enjoying this content, and share this webinar with your friends, colleagues who are into trading, and who you think will find this content of use, because more likes and more views is definitely something everybody wants on YouTube, right? So please do your part. If you are enjoying the content, please make sure you do both of these things, sharing as well as hitting the like. With that being said, let's now head over our charts of Nifty. And this one again was very simple and straightforward. So what I'll do is I'll just go over and show you what the analysis was last time. Where is Nifty? Okay, so here's the recording. So let's just check out the recording of Nifty 50 before heading over to the current count. Somewhere around here, we discussed the chart. Very simple analysis. We were expecting a triangle. So let's just check in the recording. Yes, there it is. So 24th November, this was our analysis. We were expecting that this market will continue as a triangle around the price of 19,788 and then take off from this level. We also discussed some upside targets, but let's now head over to the live chart and see how things took off from there. 19,788 and a triangle count, and this one actually played out really nicely. This is the analysis. As you can see, 24th November, the triangle literally played out, and the market did break above the triangle and has since then continued to make strong upward movement, right? Needless to say, we were able to capture parts of this movement going up as well. But most importantly, you can see the market broke above this triangle, which was discussed, right? And then it has gone up and up and up, and it actually surpassed all our upside targets as well, and has made a high so far around 20,291, right? So picture perfect, I would say. So that was our analysis for Nifty last time. Now let's have a look at what is this market doing right now. So right now, I think we are near a important level. What is possible is, I'll just show you the analysis from this point of reference. So looking at this POR around 18,840 something. So from this POR, we can see that most likely the wave 1 is complete, the 2 is complete, and the 3 is complete here, the 4 is complete here. 1 second, this is a 4 of a lower degree, right? 1 second, 1, 2, and then yes, it is a lower degree count, which we are looking at. Okay, so with that being said, what I'm really talking about here is that we are just about to complete a third wave here, right? And the internals, we have plotted the internals. Yes, we have plotted the internals, but there is one thing I like to check here before proceeding further. Yes, it is perfect count. So the point of discussion is that either this wave 3 is complete here and there will be a correction followed by a new up move, or this wave 3 is already complete. So what I really want to focus on is this last leg. So what I'll do is zoom into it. Now this is the analysis for this last leg up from the triangle break. It does look like we are in a wave 1 up, 2 down, 3 up, 4 down, and this is the fifth wave almost there. But the whole idea comes down to this: if the market sustains below this yellow channel for a session, or not even a session, for an hour or two in the opening of the session, then we can consider that the wave 5, this leg, which we think may have one leg up remaining, is already complete. That this wave 5 will be placed over here. If this wave 5 is placed over here, then in the coming sessions, we expect sideways movement, and this sideways movement can take this market to 20,070 levels or maybe lower. Right. So basically, it can take this market back to this levels of between 20,120 to 20,050, let's say. Let's just mark the downside level around 20,050 and upside level is 20,120. So there will be one more zero there. So that's about it for the main idea here. We really need to monitor this yellow trend line here and see if this market is really sustaining above it or below it. If it's below it, then we expect that this 5 is already complete and we are inside a corrective wave 4 of a high degree, because this will be a wave 3 and then we will be inside a wave 4 of a high degree, right? Just refer back to the analysis at the beginning of this Nifty count. So that's about it for Nifty. There is nothing really to add. Last analysis played out perfectly. If you are not able to catch it, you should really join these webinars live regularly. With that being said, let's now head over to our last chart, which will be the chart of Bitcoin or BTC. Before doing that, let's just quickly have a look at what we were saying in the last webinar, 44, somewhere here. We were discussing the count of Bitcoin. So I'll just show you what we were discussing. We were suggesting that this market is going to go sideways, and upside level, as you can see, is marked with the violet line. And my idea was that it will go a little bit above the current price level to the violet line and then give us small correction to the downside before taking any upward movement. So far there has not been any progress in this regard. The market has not really clarified anything. It is still within this range and still doing exactly the same thing. So we'll just look at it for a live chart. Where is this? There it is, Bitcoin. So as you can see, since 24, the market has remained almost within that range, a little bit small price movement, and it is almost at the violet line currently around at, what is this level? 38,927 something, roughly speaking. So it is still following that count, so moving precisely, but it's not giving us a very clear trading opportunity so far. What we are really waiting for is the exact thing we were waiting in the last discussion, leg up, which has sort of formed, and then a correction down or a clear connection down, which we can mark as the completion of wave 4 possibly. Once we have those things, we can then look for a new leg up as a breakout trade. So for instance, if the market does follow this yellow line, I'll just draw it like this now. So if the market does go down from here, then what we will be looking for is a break of the last high. And in this case, the last high is over here, which is price level of 38,835. So if this goes down for wave 4, then we'll place an alert here, and once this alert gets fired, this will be considered as a possible idea for long setup. So this is what we are really looking for on this counter. No clear progress, more of a sideways movement, but in alignment with our discussion. So wait and watch for Bitcoin. And with that being said, we have now discussed all the charts. In case you are joining in late, you can just watch the recording, and do not forget to hit the like button wherever you are watching LinkedIn, YouTube as a recording or live stream. And if you are finding the content of use, make sure that you share it with your friends or colleagues and other groups of traders where you think this will be valued. So that was it for our discussions. Thanks for sticking it till the end, guys, and I'll see you in the next one.